AAAFx. This is Chris taking a look at the upcoming February 12th trading week. So, as we look at the calendar, Monday is going to be fairly quiet. We do get a speech from Bank of England Governor Bailey. We'll see if it moves anything, but he's speaking at Loughborough University. Not necessarily a scenario where much will come of it, but you never know. He may say something that obviously would move the British pound and perhaps the FTSE. So, traders will have to be cognizant of that. However, with Japan and China both having a bank holiday, it does make a certain amount of sense that this spring festival will probably keep things pretty quiet in China and therefore the Asian session on Monday and Tuesday. So keep that in mind. Tuesday has inflation expectations coming out of New Zealand. This might be a little bit more of a mover than usual just due to the fact that RBNZ is expected to, ANZ, the big bank in that region of the world, is expecting the RBNZ to perhaps raise rates. So inflation expectations, something that people will be paying attention to. The British have Claimant Count Change later in the session, and the Swiss have CPI. So those could move both the pound and the franc, and most certainly the pound-franc currency pair. CPI numbers come out late Tuesday in the United States. That's obviously a stock market and greenback mover. A lot of traders will be paying close attention to that because, quite frankly, everybody is begging the Federal Reserve to start cutting rates. And as long as inflation is hot, they're not going to. And they've made that obvious. And in fact, the expectations of rates have dropped, rate cuts have dropped for 2024 and have been pushed back. So definitely something worth watching. Wednesday, we have continued spring festival activity in China, so that'll keep Asia somewhat quiet. We have the Japanese, of course, that will move the market. But Asia, it might just be a little bit of a dud most of this week. The British pound could be a mover on the CPI numbers early on Wednesday, as well as the FTSE, UK releasing its CPI numbers. Couple of speeches later in the day from minor Fed members, so we'll have to see how that plays out. Probably not a big mover, though. Thursday has the employment figures coming out of Australia. That could move the Aussie and the ASX 200, obviously. Very localized, though, would be my guess. The Chinese, again, have a bank holiday. GDP coming out of the United Kingdom, big mover of the pound would be my guess. Everybody is still trying to sort out what's going to happen with monetary policy. A little later in the day, we have the retail sales, the Empire State Manufacturing Index, and unemployment claims coming out of the United States, as well as the Philly Fed Manufacturing Index. It's not a huge number, but it does sometimes move, the Philly Fed, that is, move the stock market a bit. These numbers, on the other hand, though, are going to move everything in America, so it'll be interesting to see how that plays out. Later in the day, we get RBNZ Governor Orr speaking. Not typically a big deal, but with that increased expectation of interest rate hikes, that might mean something. We'll just have to wait and see. And again, on Friday, spring festival continues in China. So again, Asia might be a little bit wonky, to say the least. British retail sales get released. That could be a mover of the pound. And then later we get core PPI and PPI out of the United States, followed by the preliminary University of Michigan consumer sentiment numbers. That sometimes can move the stock market. Although, by that time of the week, a lot of times most traders are basically just drifting into the weekend or even leaving their desks. So looking at the euro dollar, the euro initially fell during the week, but has turned around to show some signs of life. This suggests to me that perhaps the euro may bounce a bit this coming week, but I don't think we get above 1.10. That would take a huge candlestick. And quite frankly, this is a range-bound pair most of the time anyways. This year will be interesting. Let me go ahead and put the period separators on this. There we go. So you can see last year from here to here, and could very well see the same this year, just bouncing around between three levels. The euro going to be driven by the fact that the ECB may have to cut right along with the Fed this year. So over here in gold, we've fallen during the week, but we're still well above the $2,000 level. I think 1980 might be an area worth paying attention to, because if we break down below there, we could go to 1800 eventually. This is more of a zone of support, and I think that the market probably continues more of the same. Weekly chart of silver, pretty much the same story, just replace 2000 with $22. There is a zone of support down to 21. The target above would be 26, but we've got a lot of noise between here and there, especially around the 50-week EMA, which is right here at, basically $23.25. Bitcoin has rallied rather significantly during the week, touching the $47,500 level. So one of two scenarios I think are about to play out. Either we'll break above that spike candle about a month ago, and if we do, we go to 52,000. If we don't, then we're going to continue to look at this as a potential range. As things stand right now, I have to assume that's the case, but this is a pretty bullish candlestick. And it must be said that typically candlesticks like this have follow through. Doesn't mean it has to. It just means that typically there are enough people involved. NASDAQ 100 still refuses to acknowledge gravity. We're going to 18,000 before it's all said and done. Short-term pullbacks at this point in time should be buying opportunities that you should be looking at. 16,950 underneath is the floor in the market right now. I really don't know what to say except for follow the same 6 or 7 stocks of Tesla and Nvidia and Amazon are all rallying. So the NASDAQ 100 goes. Over here in the US dollar against the Japanese yen, looks like we're going to try to take out 149.80 and then go looking to the 152 level. I do believe in buying dips going forward. Quite frankly, this is a market that continues to pay you on the interest rate differential. So why fight it? Underneath the 147.33 yen level offers support. And then again at 145. I just don't see us breaking below that anytime soon. The Aussie dollar looks suspiciously like the euro. So what this tells me is we might get a little bit of US dollar weakness early in the week. The 0.65 level offers support. If we can break above the 50-week EMA gets targeted, if we can take that out, then we could go looking to the 0.69 level. That would obviously take quite a bit of momentum, but it is possible. If we break down below the bottom of the candlestick, then the 0.63 level could be targeted. Obviously, a very negative turn of events if that happens. So over here in US oil, looks pretty healthy. I think we're going to test the 50-week EMA and then eventually the $80 level. We continue to try to form some type of range, and I think 95 and 65 might be your range for the year. We'll just have to wait and see. When I look over here in Brent, very similar setup. You could probably put a horizontal line right here. What are we going to call this? 95, basically. It's the same chart. To me, it looks like we are in the midst of making a big double bottom in the crude oil market. And that does make a certain amount of sense because we are starting to see supply drop. And of course, we have to keep in mind that the central banks around the world loosening monetary policy could, at least in theory, drive up industrial demand for energy as the economies get heated up again. It's interesting that the S&P 500 continues to go higher, breaking above the 5,000 level. Now that we are above the 5,000 level, probably brings in more FOMO trading. But even if we were to break down from here, about 150 points below, we see a hard floor. The 48.50 level is an area that I think a lot of people will be paying close attention to for support. This is a market that, I mean, it's just taken off. It's a lot of momentum and it probably continues to go higher, but once it doesn't, it could see a nasty pullback. So be aware of that. Be very cautious. Dollar Canada, pretty flat here. We're hanging around the 50-week EMA, right around the 1.35 level. The market continues to see a lot of back and forth. I just don't see an argument to break above here. And if we do, then we could go to 139. If we break down below the lows of the little box that I have drawn here, we could go down to the 200-week EMA. Keep an eye on oil. That does help the CAD, but at the same time, the US dollar has been relatively strong. Speaking of the US dollar, here against the Swiss franc, it looks like it is trying to form some type of bottom. And when you look at the monthly chart, you can see why. This is an area that the market has rejected multiple times. Now, that doesn't mean that this is going to be an easy trade, but it does suggest that we are eventually going to bounce. And once we bounce, it could be rather strong. We'll just have to wait and see, but you're going to have to be very patient with this. If we break down below the hammer from the previous week, that opens up a move down to the 0.84 level, although, we'll see. The DAX looks tired. It's struggling with the 17,000 euro level. I think we're just going to continue to consolidate in this 500 euro level. 16,500 euros should end up being support as it was previous swing high and therefore was resistance. I do not want to short this market. The FTSE 100 gave up some of the gains. I think we're just kind of languishing in this area here between 7230 and 7800 again. And, for that matter, I could probably even make this 7200. We're just kind of killing time. So you're playing this as a range. Could pull back, but it does look like we're trying to build up momentum. Over here in the Dow Jones 30, kind of a stagnant week. Does suggest that perhaps we could get a little bit of a pullback. 37,950 and then 37,050 both could offer significant support. The British pound really turned things around late in the week to form a hammer, bouncing from the 1.25 level. The 50-week EMA sits right around there. Also offers quite a bit of support as well. If we can turn around and break above the 1.28 level, then the market could go looking to the 1.3150 level. The hammer, of course, is something that a lot of people will be paying attention to, so that in and of itself might have a little bit of a self-fulfilling prophecy. The Nikkei 225 continues to look very bullish. I think this story is going to remain a buy on the dip type of story. We have just taken off. And as long as the Japanese yen is weak, I think that continues to be the case. Pound Swiss testing a major trend line next week could tell the story. If we can get above this 50-week moving average, we could find ourselves going to the 1.15 level before it's all said and done. This is one that's definitely worth watching. Although, I think this is a Swiss franc move more than anything else. Dollar continues to go sideways against the Mexican peso. Kind of interesting considering the interest rate differential. So we'll have to keep an eye on that as well. And then finally, I have the euro against the franc. It looks like the franc's losing across the board, although this is definitely a more important pair than the others. So this inverted hammer here on the monthly chart, if we can break above the previous month high, it might be worth, which is basically right here, it might be worth an attempt to go long. I wouldn't put my entire portfolio into it, but it certainly would be a technically strong sign on a long-term chart. The Swiss, of course, pay close attention to this interest rate differential and, of course, the exchange rate, because Switzerland and Europe are so highly interconnected when it comes to their trade. So this is the one that the Swiss National Bank really pays the most attention to. So be aware of that. They have intervened multiple times in the past. So with that being said, that is the week of February 12th in a nutshell. And we'll take a look at how this turned out. Remember to tune in next week for your weekly forecast.